tonight we are live from the Netherlands and the United Kingdom. Welcome to StockBox Premiere. Well, joining us tonight on the panel, our guests are Angus Forrest and Kerry Chambers from Acuity Risk Management. That's the ticker ACRM, where we're talking about their Stream Risk Management Software as a Service or SaaS platform. And Craig Foster, CEO of ONDO InsurTech, that's the ticker ONDO, O-N-D-O, talking about LeakBot, the leak detection technology and service to help homeowners and insurance companies mitigate flood risk. So the format is to begin with a 10 to 15 minute interview, followed by the open Q&A session for 15 minutes. And this is your chance to put your questions to the directors speaking using the live chat. Please do join in the conversation by using the YouTube live chat or hashtag StockBoxPremiere over on Twitter. And please also hit that like or subscribe button if you are indeed enjoying the show this evening. As always, the directors are bound by market rules, but they will do their very best to answer your questions as they can. So to kick us off tonight, let's welcome our first guests. That's Angus Forrest and Kerry Chambers from Acuity Risk Management. Good evening to you both. Welcome onto StockBox Premiere. How are you both doing?
Very well, thank you.
Very well, thanks, Mark.
Well, thank you both very much for joining us. So the Stream platform, which is what we're going to be talking about really this evening, is a platform that collects data about organisations and provides functionality to improve business decisions and management. It is in use with around 70 organisations in sectors including the government, utilities, defence, broadcasting, manufacturing and healthcare. So we're going to cover everything and all about this software this evening and of course your business plan. So, I mean, first of all, let's get a bit of an introduction. It's great to have you both on. Could you perhaps just for new or potentially existing investors give an overview of the Stream platform and its core applications? So whoever would like to take that question.
Yeah, I'll take that. Thanks, Mark. So Stream is the name of the platform. Stream is an integrated risk management platform. So integrated risk management is really a proactive approach to managing risk within the organisation. So using a platform like Stream allows organisations to collect and analyse data to improve their business decisions, to give a more holistic view in terms of management of risk across an organisation and obviously strengthens compliance. It gives senior leadership teams a holistic view of the risk profile and helps them make decisions on how can they improve that risk profile, what do they need to do in terms of tolerance, how do they maintain it and so on. In terms of use cases, so like I say, we are an integrated risk management platform. So we look at all areas of risk inside an organisation, but people will come to us with predominant use cases. So that could be cyber, IT risk management, enterprise risk management, operational risk management, supply chain and third-party risk management, perhaps compliance with particular standards such as ISO. Those are the core use cases, and Stream allows organizations to maintain one or all of those use cases and everything underlying. So policy management, so if they were coming to us for privacy, they could do the policy management alongside that as well. As you mentioned, it's the risk Stream Integrated Risk Manager is in the cloud, so predominantly we sell this as a software as a service platform. However, we do install it on premise for customers that have certain security requirement needs and may need that in their data center. So hopefully that gives you a bit of an overview of what the solution does.
Yes, thank you very much. A nice little introduction there. Now, of course, we have seen as well the final stages of the Drums Acuity reverse takeover process with the name change. That's a name change from Drums to Acuity RM, Acuity Risk Management. So this process has been finalising throughout last week with the new name along with the Stream platform. So what can we expect to see in terms of sort of accelerated growth in the coming months now that the corporate activities can take a backseat, or at least for the time being, you can get on with the real work?
You're right, Mark. There has been an awful lot of work on the acquisition. It takes immense amount of stressful sort of work, and then you get there and you think you've done it and it's all over, but it's not. There are still lots of things to do to make the acquisition work, to improve processes and focus and so on. But you're absolutely right. The business is now focused on its growth, because that's how shareholder value will be enhanced. These sort of businesses are valued based on scale and growth rates. We have a great opportunity in a large and fast growing market. We have been growing every quarter since Kerry joined 2 years ago, and she's done a fantastic job. All the metrics, so the renewal rates, the number of customers, the revenues, and we are now focused on absolutely growing the top line. We have put in a number of processes, which Kerry will probably talk to you about in a second, to enhance the growth. So we have our own sales force, and we've recently started appointing partners and enhancing the performance of the existing partners. So you're absolutely right. We are driving the growth of the business as our number one priority, and that's where all the focus is. But it's not to say we can't do improvement in probably every single area of the business, and we are well aware of that.
Okay, well, thank you for that, Angus. And of course, recent news is, of course, the news with your partnership with Nettitude. So this also goes to show the business is moving on here, as you mentioned. So this creates a credible sales proxy within the business. Can investors expect to see further such relationships in the future?
Yeah, absolutely. So the strategic partner program that we've introduced is really key to our growth. It's a strategic partner program because we select our partners based on the value that both sides of that partnership bring to the solution or service that we're offering to our customers. Creating an ecosystem of partners to expand quickly is a proven strategy. Partnerships are very exciting because, in my experience, they've got an accelerator effect on growth, because we'll be working with their sales teams. The sales teams are often bigger, have more geographic coverage, and so we can work with their sales teams in order to push the orders for Stream. Partners bring us credibility as well. So we've got our own well-earned reputation for excellence in customer service, excellence in technology and innovation, and so on. But the partners bring added credibility to that. So, we're looking forward to expanding that ecosystem of partnerships. And as you rightly pointed out, we've recently signed with Nettitude. We've had two very exciting partners that we signed with earlier this year out in the US, two very large cyber ratings platforms, Security Scorecard and MasterCard Risk Recon. So we're in the sales enablement phase of that partnership at the moment, but I'm expecting to see exciting things from that. Like I say, the partners are typically bigger than us, so they've got those extensive sales teams and resources that we can work alongside them with. And we believe that these partners that we're selecting really complement the solution that we have with Stream and the value and vision that we've got in this space.
Okay, thank you, Kerry, for that. I like the fact you say you feel like an ecosystem there of partners. That's
Correct.
Yes, that sounds good. Now, does the Stream platform have a forward development roadmap that may expand the bandwidth of its application and future-proof its market position? And if so, will significant additional funding be required to support this growth plan?
Sure. Yeah, so we definitely have the product roadmap. The product roadmap is very detailed. As with most software development houses, that roadmap constitutes, kind of what we believe should contain in terms of feature enhancements. But we have customer advisory sessions with our, leading customers, and we take on board their advice and their guidance in terms of what they think should be included in the platform. Exciting developments at the moment, because obviously we're already looking at AI and how that could enhance Stream in the future. Clearly there's a lot to be looking at in terms of AI, in terms of the security and the resilience of that, but that's quite exciting at the moment. The product development teams have already kicked off work looking at the use of AI to enhance, I suppose, the decisions that the human operators are making. But this is all manageable within our current plans. We won't be needing any additional investment in terms of the product development. That's all kind of planned in terms of how we will approach that. And like I say, the AI side of that, which people are often asking me about in this current environment, is underway.
Okay, well, certainly AI is very in the minds of lots of people, lots of investors at the moment. That's absolutely for sure. We can
100%.
talk a bit more about the AI later on, I think, when we get to our roundtable discussion, because there are some topics around innovative technologies and their uses in tech companies. But another question I have for you, so of course the corporate cybersecurity and risk management sector, which has considerable regulatory consequences for major institutions, financial institutions, for example, this presents a big market opportunity. Now, with this, many enterprise-level technology and operations vendors are resident in such institutions. So does this pose a possibility for technical integration with these companies, or would such companies potentially pose a takeover potential for you?
Well, I think that firstly, regulation is important. It is a market driver, both legislation which is passed by Parliament, there are stock exchange regulations, there's accounting regulations, and they're all focused on risk management and particularly cybersecurity. And even if you don't have regulation, if you look around at present, there are so many cybersecurity breaches, and they're with major companies. So everybody's interested in the sector, which drives demand, not only from people seeking regulatory approval, but for the general running of the business. So there is tremendous opportunity. One of the things we're working with is to make our product Stream integrate much more easily with other third-party products, and that is an active program at the moment. So yes, we will be able to tie in with many more products, and secondly, it will give us opportunities to acquire businesses, and we probably will become extremely attractive for competitors, people wanting to enter the market for GRC, governance, risk, compliance. And we already have a number of people who've approached us, but we haven't really taken it anywhere because we think we can grow this business significantly and generate good returns for shareholders before we even think about any sale of the business.
Okay, well, I'm sure shareholders will be pleased to hear that. You want to grow this business before you would even consider any kind of sale or takeover. Angus, just a little question that came to my mind. Have you had any experience in growing similar companies like this before in your past?
Yes, I've had several. I'm very old, and I've been involved in growing IT businesses for more than 20 years, and a couple of successes. Probably the best known one was a company called Cybit, which was in telematics. It grew from nothing to number one operator in the UK in 3 years and in the top 10 in the world in 5 years. So yes, and then it was bought by some private equity, and it's subsequently been bought by Michelin Tires for a very, very high price.
Okay, well, thank you for that, Angus. That does take us nicely on time to go to any questions from shareholders. I can see one or two have come in, so please, anyone who has any questions for either Kerry or Angus here on Acuity, the business plan, or indeed the Stream software, I'm sure we can get them answered. So here's one that has popped up. Will Acuity at some point increase the price of Stream? At present, it's at a 92% profit.
So we review our pricing quite regularly. So obviously our aim is to remain competitive, and it is a profitable model. But we review. There's a commercial team that reviews our competitiveness in the market, and how we align in that market probably twice a year. So yes, we will be looking at the price point, and in future possibly see an increase, and we make sure that we're aligned and winning business, and it's not price prohibitive.
Okay, thank you. I think I've answered that question. Thank you for submitting that one. There's a few that have come in before we went live, but as I say, if anyone does have any questions, just type them there in the YouTube. We will pick them up. But one question that came in before was, can you explain the revenue model for Stream, both at rollout and reoccurring streams?
Yeah. So shall I take that, Angus? Yeah. So
Yeah.
So the current revenue model is so quite differently to other suppliers in the market. We have a platform fee, so our customers will pay us to use the Stream platform. We don't charge for different modules of risk. So where I talked earlier about those use cases, we don't charge separately for modules for cybersecurity or for data privacy or enterprise risk. We have platform fees that creates that holistic platform use that I talked about earlier. If you put things into modules, it can make things quite siloed. So there's a platform fee, and then there's a user-based commercial model that goes alongside that. All of our commercial models are 3-year subscription-based terms. That's both for the cloud and for the on-premise customers. Implementation services are a fixed price, but on top of the year 1 fees. So we drive that those multi-year contracts. So that means that midterm renewals are automatic in that 3-year period, 3 to 5 year period, which means that we can have some predictability around our forward contracted revenue. And then end of contract renewals are again multi-year terms. Those terms will have been discussed with the client partners and their customers during the management of the account during the term of the initial business.
Okay, thank you, Kerry. So, of course, we're not going to talk about forecasts or forward-looking statements at the moment. I know they will come later, but in theory then, with this platform fee and the multi-year approach, you would get pretty good clarity of forward, a prediction of what's to come business-wise.
Yeah, absolutely. That gives us that predictability out into the future, knowing which of those contracts are going to renew on the sort of 24 months and the 36-month point. So yes. Okay,
fantastic. Angus?
I think that there are a couple of things about a SaaS model. Firstly, they tend to be very cash generative. So you've got a 3-year contract, you charge your fees annually in advance, and it enables you to grow quickly, because you've got your existing clients who are just trading away, and they've got to renew at the end of the year, and they can focus on winning new clients and making upsell, because one of the things that Kerry's been very good at has been looking at our bigger clients and saying, wouldn't you like to buy a bit of more Stream to use in doing X, Y, Z? And we've been very successful at growing within clients, and we're looking forward to increasing the number of clients dramatically.
Would there be an ideal number that you would like to see the company at in terms of clients by the end of this year? I know I'm asking you to make a prediction there, but maybe you have a vision in mind.
I think I better ask Kerry to say that, because she's the one who's got to deliver it.
By the end of this year, did you say?
Yeah, just as an idea. So by the end of this year,
So,
yeah.
I mean, it would be great to including our direct channel and our indirect channel to increase our net new logos by sort of 10 to 15 new logos.
Okay.
But also, we consider new business within an account if we see a new stream of business in that account, different departments, different divisions using it. So that would be a great place to be by the end of this year.
Perfect. Okay, thank you for that. I won't hold you to that, but I will remind you of it later on.
I'll come back.
I see a question has come in here. It's regarding competition. How much competition is there from other companies?
Yeah, so in terms of market, there's predominantly sort of 4 or 5 large US software suppliers. So that would be organizations like RSA Archer, MetricStream, Risk Connect, OneTrust. They are big technology and service suppliers. So they provide both the technology and the services surrounding risk management to their customers. They're quite modular in their approach, which I talked a little bit about earlier. So their implementations can be quite siloed, and often it takes them a long time to implement, but also, to get those different modules speaking to each other can be quite cumbersome. And then sitting underneath those kind of 5 very large US organizations, there's multiple smaller to mid-sized suppliers offering, GRC or integrated risk management solutions. We would differentiate ourselves in terms of the smaller to mid-sized suppliers with our speed of deployment. So using Acuity and the Stream platform, it would take weeks rather than months to have a customer set up and using Stream. So that means that they see value from the solution far more quickly. In reality, it does take some of the larger risk management programs with larger organizations, a year, 18 months to be set up, and we want our customers to be getting the value from the platform as quickly as possible. So we focus on that. The removal of those modular requirements, so senior leadership teams get that, better view across the organization. And then another differentiator that we have is a kind of trusted advisor status. Our customer service, our consultancy services are consistently ranked top, where we win awards quarter after quarter on review platforms such as G2, which is ranked by the customers. We have great reputational recognition. People trust what we are talking to them about. Gartner Peer Insights, our ranking there is 4.8 out of 5. So those are the types of things, the reputational recognition that differentiates us from some of our competitors.
Okay, great. Thank you very much for a detailed answer. Thank you, Kerry. Another question that I had beforehand was how many people work for the business directly?
Yes, so we've got 20 people at Acuity at the moment. Obviously, as we grow, the intention will be to increase that number. So as we grow as a business, or as we bring certain activities in-house and expand those activities that might currently be outsourced, I'm thinking of software technology management. And as we increase the sales and marketing teams, then we expect that number of employees to grow with us.
Okay. And do you know what the percentage split is between Acuity direct sales and partner sales?
Yes, I do. So at the moment, I would say it's 85% direct and 15% has come from the channel, from the partnerships. And that's where we see our huge opportunity for growth with that partner.
To increase the partner up from 15%. Yeah. Okay.
Absolutely. Yeah.
Okay. Perfect. Now, the majority of the sales are UK based. How does the company intend to roll out Stream worldwide? Do you have a plan of attack?
Yes, we do. So I have these numbers. So at the moment, just short of 70%, 67% of the business currently is in the UK. 11% of our business is from our existing US customers. 22% is made up from Europe and the rest of the world. Our opportunity is in that US sector. So whereas 11% of our revenue comes from the US market, the US market represents 45% of the global eGRC market. So we intend to take our market share primarily from the US market via the partner program, which obviously we've talked about earlier in the interview. We will invest at a later date in the direct channel focused on the US as well, but our plans for growth are focusing on the US market.
Okay, so your plans to growth are focusing on the US market. Well, that's interesting. I know our next guest who is on, who's also into risk management in a different way, but he cracking the US market is a huge win. I think particularly insurance and risk management. But I think getting your foot in the door can be quite tricky. But you have a plan to get there, do you?
So we do. So we have, like I say, 11% of our existing business is already with US organizations. So we have good case studies in the US, and that's where we're particularly focused on the strategic side of our partnership and using our US partners to make inroads in that US market, because we're aware of obviously how difficult it is to go fresh into a new geographic region, and so we're intending on working alongside our partners in terms of working on that US market share.
Okay, perfect. Well, I don't have any. Actually, one question has come in. Someone was just asking regarding board salaries. The remuneration of the board. Is it in line with sort of market or standards, would you say?
It's very modest, I would say, compared with both similar companies in the UK and certainly similar companies in the US. It's a tight ship when it comes to pay. There is both a pay and performance bonus, but the basics are modest.
Okay, thank you. Actually, another question has come in just through Twitter. Does the Stream platform need to be localized to regulatory requirements in different countries?
Yeah, so the Stream platform is configurable at the front end. So where the requirements are different from country to country or different states in the US, then we would configure that based on the local requirements. And the requirements are discussed extensively with customers before the implementation.
Okay, perfect. So you don't see any barriers to entry there on that front?
Not at all. It's front end user interface configuration, so very easy to do.
Perfect. Okay. Well, I'm just looking around to see if there's any other comments or questions coming in on YouTube. I don't see any there, so I'll give it maybe another just few seconds if anyone does want to ask anything, because we are good on time. We have probably about a minute left with you guys. I think actually one. Yes, I do see one. Is there a liability concern for companies? Is there a liability concern for the compliance of the platform?
I think the answer to that is it is up to the customer to take whatever measures they need in order to manage the liability. We do obviously have insurance, but it is really down to the customer to ensure that the product is working in a way that's going to work for them and cover the risk. We can provide advice, but then they can do some configuration themselves, and we do not know if they're taking the feeds as they are intended. So really, it's up to the customer, but we do carry insurance.
So in our software license agreement, there's actually a clause that we're not liable for any loss to the licensee at all. So whatever is contained in the Stream platform, the liability for that will sit with the customer. We're not providing risk management advisory services. We're simply enabling them with a software platform and a tool to be able to manage those requirements within the organization themselves.
Okay, well, thank you both very much for that. That was an interesting question that came in at the end, but that does put us bang on time. Thank you both very much for your time, Kerry Chambers and Angus Forrest. I hope you can hang around backstage for half an hour and join us again for our roundtable discussion. But thank you for now. We'll take a quick 2-minute break and be back with Craig Foster from ONDO InsurTech. Thank you both for your time so far.
Thank you.
Thank you.
Well, welcome back onto StockBox Premiere, and I'll now welcome our next guest, that is Craig Foster, the CEO of ONDO InsurTech. Good evening to you, Craig. Welcome onto StockBox Premiere. How are you doing?
Hi, Mark. Yeah, I'm good. Good to see you again.
Yes, good to see you again. It's the first time we're doing a live broadcast with you. Thank you very much for joining us. We're going to be talking, of course, about the LeakBot, but one thing I noticed that the company's statement is ONDO is on a mission to make the LeakBot system the equivalent of a 5-lever door lock, something every home insurer expects every home to have as standard. So yes, a nice bold statement there, Craig. I think first of all, just perhaps it's worth giving a bit of an introduction again, or a high-level overview to the technology, the LeakBot technology and the software behind that, and how it all works.
Yeah, sure. So, I mean, the vision for our company is to become a world leader in claim prevention technology, specifically for home insurers. So the first peril that we're focused on, the first problem for home insurers, is the problem of water leaks. So water leaks cause 1.6 million claims every year, just taking the United States and the UK. And that costs insurance companies £14 billion every year. So these leaks, Mark, you know, in your own house, where are the pipes? They're hidden in walls, they're hidden in cavity walls, in ceilings, and you can't see those pipes. And they will start leaking. You don't know that there's a problem in your house until it's too late. And that will eventually manifest as you'll find a damp patch, or you'll move some furniture and see that something's gone wrong. And those claims add up to £14 billion worth of claims a year. So we've got a proprietary solution for insurance companies to prevent those claims from happening. So the product's called LeakBot, as you mentioned. The first thing that's unique is it's a proprietary sensor. So we invented a new way of detecting leaks in houses, basically. So I thought you'd ask me this question, so I've got my demo device here to show you. So if you think where the pipe comes in and enters the property, you just basically clip the device to the pipe where the water comes into the home. And the way that it works is it's using temperature. So it's measuring the temperature of the incoming water through the pipe here. And there's a second temperature thermistor measuring the ambient temperature where the device is located. And it's measuring the difference between the two. And the simple thing that we noticed, and we own the patents on this basic idea all around the world, is that if there's no leaks in a property, when you're not using water, the water stood still in the pipe. So the temperature, they return to an equilibrium point. There's no difference between the two readings. If there's a leak in the property, there's a permanent draw of water through the pipe, and that creates a permanent difference in the two readings, and our algorithm picks that out. So the reason that's important is it's very accurate. We can detect a very, very small leak, and it's the only known way of detecting a leak without cutting a pipe. And we own the basic IP on that idea all around the world.
Fantastic. Well, thank you. I like your little demonstration device there. That really explains how easy it is and what it looks like to install it. So this really is it's revolutionary almost then, would you say, in this application? Did you hear me, Craig?
Yeah, sorry, I lost you then for a second. Just say that again, Mark.
Oh, sorry. I said it's revolutionary, would you say, this kind of technology in this application?
Yeah, absolutely. So there's nothing else like this being offered to insurance companies. It's unique, and like I say, we invented that, and we own the IP on that all around the world. And it's particularly relevant to an insurer because what it means is it's a really scalable way of solving these problems for insurance companies, because it's a low-cost unit, and insurers can afford to give this away for free to their policyholders. And then through the app, we also offer a repair service that's also free to the homeowner. And the insurance company basically pays us to fix those leaks. And it's worthwhile to do that because that costs less than the claim saving that we can generate. Okay,
well, that's interesting because, of course, you've gone down the insurance business model, haven't you, rather than just sort of retailing LeakBot technology as perhaps a plumbing tool and selling it through, sort of hardware stores, that kind of thing for people to pick up on. What were the origins of such a confident and narrow business plan? Was it just that you've got access to this market that the insurance companies, it's a win-win effect is what I'm trying to say. It's a win-win for everyone.
Yeah, I mean, people have tried to sell in the US leak detection devices, in retail with varying degrees of success. I don't think it's particularly a category that is very top of mind with customers, and they're out there actively looking for a leak detector for their house. What we found through trial and error, though, is that it really is a high value problem specifically for home insurers. And actually, when we offer the device for free through an insurance company's channels, we get really high redemption rates. So it does work when it's offered for free. So to give you an example, we ran a campaign just last week with one of our partners. That's very typical. They sent an email to their customers and said, hey, don't forget, you are entitled to a LeakBot for free. Click here if you would like one. And we got a 25% redemption rate. So, if we emailed 100 customers, we sent out 25 LeakBots on the back of those email campaigns. Most marketing campaigns don't get a 25% open rate. Our partner in Sweden, Lancer Schaffengard, they send a physical postcard into customers' homes, and we get a 50% redemption rate on the postcard when people are offered one of these devices. So when it's offered by an insurance company for free, and it looks like a kind of cool gadget, it's got an app, then customers are really interested to take one out. So we found that go-to-market model works really well.
Okay, yeah, it certainly sounds like it does, Craig. This go-to-market model that you talk about here, it's a win for everyone, a win for you as the company, a win for the insurance company because it can mitigate risk and reduce payouts, but a win for the homeowner as well. So I think that's a very good way of approaching it, giving it away for free through insurance companies. But it's not just the insurance companies. You've also had the Portsmouth Water, who've been running tests on the LeakBot as well, which have some results out just the other week. I think they were being presented at a conference there. Could you perhaps expand on any regulatory water saving remit that the government has in place currently, and access to state grants or finance methods to help stop water waste via leakage? Because there's quite a lot, isn't there, that gets wasted on a daily basis in the home, and I think the UK government in particular are very keen to reduce that.
Yeah, exactly right. So, I mean, our focus, as I've explained, has always been on working with insurance companies. And historically, in the UK, for example, water companies have not been particularly motivated to drive down leakage on the customer side in the house, in the home. They've more been focused by the regulator on driving down leakage on their own infrastructure. But there's been a bit of a change recently. Now, the reason why I know about this is because we were approached by Portsmouth Water, and they, credit to them, they said to us, look, we know you're really focused on the insurance industry, but can we try and use this insurance application and try and use it for a different purpose in the water sector? So we ran an experiment with them. And what we learned through talking to them is there's been this regulatory shift in the UK. So the England and Wales regulator, Ofwat, and are now realizing that there's so much leakage on the customer side, they need to focus more on that. So there's a long run goal to reduce household consumption by 36 litres per day, which is quite an ambitious goal. And what Ofwat have done, they have an overall £300 million of grants to help the water sector. And that's just been increased from 200 to 300. And the extra £300 million, the extra £100 million is specifically to drive water efficiency initiatives. So they're very serious about solving this problem. Now, we just announced at a water industry event alongside Ofwat the results of the Portsmouth trial. And what we showed is we can reduce leakage in houses in Portsmouth by 60%. And when you run the math on how much of a water saving that is, it means we can deliver the majority of that Ofwat saving through the installation of our technology. So it's a very interesting development. And I don't see these two things as separate. Since the event, Mark, it's been very interesting. And we've talking to a lot more water companies across the country. We're talking to different water industry regulatory bodies. And we're learning a lot through those conversations. And increasingly what we're realizing is, I think our role is in bringing together the insurance industry and the water industry to solve this water efficiency problem in England and Wales. Because interestingly, it's the same cost, it's the same technology and the same activity that we provide. That's, funnily enough, solves two different problems in two different sectors. So the two sectors can actually share the cost of us doing what we do, and we deliver two different benefits, one for the water industry and one for the insurance industry. So it's a very, there's a bit of luck involved in the timing of that for us, but it's quite a good position for us to be in right now.
Indeed, very good. I mean, was that originally the plan to approach water companies, or did that just sort of happen?
I would love to say this was all part of some kind of cunning master plan, but no, I think it was a bit of a being in the right place at the right time when they approached us, and then just asking the right questions and eventually kind of piecing that together that these two things actually fit together really, really well.
Yeah, indeed. No, it's a great two-pronged business approach there. I mean, you can save all that water. I mean, I was talking to you the other day, wasn't I, about imagine how much money would have to be spent on marketing campaigns from these water companies to persuade people to turn the tap off when they're brushing their teeth, for example, or get that leaky toilet fixed. Well, you can solve a lot of those problems very, very quickly.
Well,
and people will be happy because it saves them money.
Yeah, just the other day, it's the thing. It's really funny because when we're talking to our insurance partners, they really care about the small leaks that are hidden in the walls and in the ceilings, but we don't know what we're going to fix until we go. Now, we actually end up fixing a lot of leaking toilets. When you see the water just running down the back of a loo, and the insurers, they don't really care about that. I mean, homeowner, you're quite happy when someone paid for by the insurance company comes and fixes that, but I have to explain away why we have to do that as a course of what we're doing. What I've since learned is that is the killer problem within the water industry. So I was talking to somebody at Waterwise the other day, and they've actually got white papers on how do we fix the leaky loo problem in Britain. It's such a massive problem when you end up how many hundreds of megalitres a day is wasted through leaky loos. And actually, we reliably detect them. We reliably fix them efficiently just in the normal course of what we're doing. And it's a really scalable, solution. So it's very interesting.
Indeed, no, it's a great market opportunity there, I think, Craig. We were talking with Acuity about the US market, and I know you're very keen to crack that because it is a considerable market certainly when it comes to insurance and these kind of things. And you have been making significant inroads, haven't you, with the recent partnership with WNS, and as well as the mutual of Enumclaw, the trial that they're undertaking as well. So how do ONDO, as a non-US company, plan to gain further traction in the US market, which could be very lucrative for you?
Well, I think the first thing is, regardless of international boundaries, just core strategy comes into play. That in the United States, this is an even bigger problem than it is in Europe in terms of the average underwriting cost per policy in the US. It's even bigger in terms of the amount of claims that are driven by leaks in houses. And fundamentally, there's no competitor solution that really nails this job for US insurers. They're either too expensive and not really scalable, or they just don't actually address the core problem. So the first thing that we did to crack the US market is over a year ago, we hired a guy called Jim Strickland to lead our sales effort in the US. He's got 30 years experience of selling into P&C insurers in the United States. He knows the environment very well. But it takes a while to do these big B2B sales. He's been working on that pipeline for a while. We just a week or so ago announced our first kind of major commitment from a US carrier. It was a Pacific Northwest insurer called Mutual of Enumclaw. We're going to ship install 10,000 units in Washington State in the next 6 months, and that was really the starting gun of our efforts of announcing our efforts in the US. And what Jim would say if he was on the call is it's really a momentum game in the US. Like, there's a few raised eyebrows among US insurers that we've signed that deal. I think that would change quite quickly when we announce the second and the third and the fourth deal. And the other thing that we learned, though, Mark, in the US is just, there's a bit of humility here. We're a small company. We've got a 16 million market cap with 25 employees, and only one of them is in the United States, really. So it's okay pitching to a smaller US insurer, but if we're talking to a top 10 US carrier that operates in most of the states across the US, there's a kind of barrier to the sale when they say, look, can we really believe that if you do a pilot and it goes well, that you could scale this across 40 US states if we wanted you to? It's quite a big jump for them to make. So the other thing that we figured out as part of the strategy, much like the guys at Acuity were saying, it's about an ecosystem of partners. We've announced one with the partnership with WNS. They're a $4 billion NASDAQ-listed business process management company that work with big insurance carriers. They bring something to the table for us. We bring something to the table for them in terms of our unique technology. But I think just like Kerry was saying, actually, I think the right approach here is an ecosystem of different partners. So there's other things that we're working on that are going to help in the United States. So I think just that dose of humility is important. We're a small company at the start of this journey, and the US is a very big market. But that's also what makes it really exciting if we really get some momentum going there, which we expect that we will.
Okay, fantastic. Well, I do see there's 3 or 4 questions that have come in, but I do just want to ask you first of all on the announcement today, I think, that was made, wasn't it? It's the pilot program with G4S, a name that lots of people will know, in Denmark to test a supplemental go-to-market model for LeakBot in Denmark. And you were quoted in the RNS saying this is an interesting test of a new route to market. I mean, could you just explain a little bit more about the significance of this news, what it really is all about?
Yeah, I mean, it was, in relative terms, it was a relatively small announcement today. It's just a quick pilot that we're going to execute with G4S over the course of a month. But it's quite an interesting development. I mean, one thing that I've seen before talking to different kind of smart security systems is they're obviously trying to grow their own customer base, and they see insurance customers, insurance partners has been a really good route to market for them. And often the pitch from them is they want the insurance company to introduce a security system, say, hey, why don't you have these guys come around your house and do a security audit and talk to you about options to make your home safe? And this what G4S are testing, they've approached one of the largest insurance companies in Denmark, not one that we work with at the moment, and they've said, hey, could we basically offer your customers a free leak bot installed and a security audit? And so it's a win-win-win really, because this particular insurance company will get leak bots actually physically installed in their customers' houses for zero cost. And G4S get to talk to customers about other options in the home, and the customers have a leak bot installed in the house at no cost. So it's a really interesting test. Let's see if it works. I find it hard to imagine why it won't actually, but you never know. So let's see how it goes over the next 4 weeks.
So G4S are really using it as an in to make a quotation for security for the home.
Yeah, I think if that works, then that will. The idea is that will become a driving force for their basically customer growth and sales acquisition. And this particular insurance company will, have a lot of leak bots installed at zero cost for them, which is pretty good. Indeed.
Well, let's go to the questions, because I do see a few more have come in. So the first one here: are we expecting to see news on contract wins following the US WNS go-to-market partnership announced recently?
Well, obviously, I can't say things that are not in the public domain at the moment, but we're working on a whole host of a pipeline of activity. There's ongoing conversations going on all the time. Can't really say much more than that at the moment.
Okay, no, that's fair enough. We wait to see what happens there. Does the leak bot fit on both 15 and 22 millimeter copper pipe, as well as 20 and 25 millimeter blue MDPE pipe? Very technical question. Could you explain the business revenue model? Specifically, is leak bot sold leased to insurers? So there's two questions there, isn't there?
Yeah, so the first question, yes, it works on copper, MDPE, all different types of pipe material, actually. So there's no limitation on terms of the material. And yes, it will work up to 25 millimeter pipe. So there's no limitation. The only limitation we've seen, I think in Switzerland specifically, they have like 32 millimeter pipe or something, which is the first time we ever saw something that it can't fit around. But if you have a look the way the clip works, it's basically be designed to there's quite a lot of flex on the pipe, so it can fit different types of pipe material. Okay. In the second question, in terms of the business and revenue model, I mean, we've experimented a bit with this in different kind of pricing structures, but it's basically a recurring revenue model. So we price this on an ongoing basis to the carrier and provide this as a service. So it's kind of claims mitigation as a service in terms of the hardware, the software, the customer support, and the repairs in the home as well.
Okay, fantastic. Thank you. So I think there's another question as well, sort of a follow on from that. Is there a monthly revenue for using the app or the software? The app mentions the ability to call a plumber and have the leak repaired free of charge. Who pays for this?
Yeah, so it's all paid for by the insurance company. In previous pricing models, it was complex, and yes, there was a recurring price for the app and the software, a separate charge for repairs, a hardware cost when we first shipped it. It was too complicated for the insurance company to really understand how much is this actually going to cost. So increasingly what we've done is just simplified this into a single flat fee that recurs into the future as long as the device is connected, and that includes everything. Including the plumbing service where we're providing that. There are certain go-to-market models where we're not doing the plumbing. We provide our technology and we train the plumbers. In Sweden, for example, they use their own network of plumbers, and it works perfectly well that way. So obviously the monthly fee is less in those instances. So yeah, it's relatively simple, but it's an ongoing kind of service subscription pricing model.
Okay, thank you. Okay, there's some more questions I can see. I think one that I can just see on the side of the screen is one: how will reoccurring revenue from customers continue if they leave their policy?
If they leave their policy, then the insurance company obviously won't want to pay after that point. So the onus is on the insurer to tell us that the customer's left. A lot of our contracts have a minimum term built in, so they can't just pay like 1 month they have to like pay for it for a minimum term. We have a different arrangement with different insurers, but often the insurance company doesn't actually want the customer to just get cut, kind of the service to be cut dead. So in most cases, we have the marketing rights to then say to that customer, hey, we know you've left Acme Insurance, but if you would like to continue with our service for this amount per month, we'll continue and you can still access the plumbing repair service.
Okay, fantastic. I think the questions popped up there. Are UK water companies, firstly Portsmouth Water, awaiting the new Ofwat fund to be announced prior to commitment of an enlarged rollout?
I mean, the whole water industry is a kind of new world to us. We're learning very, very quickly, as I was explaining. I think a lot of the water companies now, all the water companies now, are working on their what's called the PR24 business plan. So it's for the new regulatory period. I don't think the water companies, it's not predicated on being able to access the Ofwat funding. So the conversations we're having at the moment, there's a business case for why the water companies would want to reduce this leakage anyway, without Ofwat kind of subsidizing this to a degree. But the fact that those Ofwat funds exist and different tranches become available at different points over the next year or two is obviously a helpful driver as well. Okay. But I think the thing that I see really as our job now to work with some of the industry bodies is really put together quite an exciting collaboration that no one's really tried to do before, which is, I think we can say to the water companies, look, in your region, if you subsidize the cost of these devices, I can find insurance companies that will pay to fix those leaks at no cost to you. And likewise, what I say to the insurers is, you normally would pay us within the cost for the device and for the repairs. What would you say if I could find a water company that would pay for a device for your customer for free, so you just pay less for the repairs? What do you think? And they say, obviously, yeah, that's great. That sounds like a great idea. So I think the cool thing here is the underlying cost is exactly the same, but you've got two different parties financially motivated to drive a different non-overlapping benefit that comes out to the back of it. So it's cheaper for everybody. So I think it's kind of pulling that together now as a framework and doing I think we'll start small and do a collaboration like that on a smaller scale. But the exciting thing about that is that's endlessly scalable if we prove that. And it's got a really great environmental benefit at the heart of it. So, I think the sustainability angle becomes the driving message for the consumer, is that, water company X is collaborating with insurance company Y to deliver this fantastic environmental benefit and fix this UK-wide problem of, leaky houses. And it lowers your water bill, it lowers your insurance bill at the same time. So there's just so many positive things that would come off the back of that collaboration.
Indeed. Okay, well, thank you for that. Is the trial with G4S limited to a rollout solely in Denmark, or could it be expanded to other markets, as it would appear that LeakBot would provide a positive synergy with their own product?
So the trial is specifically with G4S in Denmark. So we're really just focused on getting that executed over the next month. But yes, the same thought has occurred to me. I'm very familiar with other leading alarm companies in Europe, in the United States, and I know that they do have that same model where they're either spending a lot of money on advertising for customers to accept that kind of an in-home audit, or they're buying leads one way or another, and it's quite an expensive kind of marketing exercise. If this was something that other security firms could do, or G4S could do in other regions, if it works, you definitely can see the reason why other firms will be interested in kind of replicating this idea potentially.
Okay, thank you. I see another question has popped up here. Does the company have long-term ambitions to introduce further claims-saving technologies beyond LeakBot?
Yeah, absolutely. We've always said the reason why we didn't call the company LeakBot and we called it ONDO InsurTech is the vision is broader, that we see opportunities for other other technologies and clever products to reduce risk in multiple ways for insurers. I think the interesting thing is people have tried in Leak and struggled to get a commercial model that works with the other types of technology. But insurers are often collaborated with security firms and tried to build those into the products, and it's quite difficult to get any kind of business model that works. So I think we see the first thing is, as we've got one that is scalable and it works, that's the right place to get the foothold. But what we see there that's interesting is, as a result of doing LeakBot, everyone ends up with our app on their phone. And increasingly, Mark, what we're saying to insurers, or we're having insurers ask us the question is, they say, hey, we've got an app that we would love all of our customers to have, so we can cross-sell banking products and savings products and motor insurance. And the problem is it's quite difficult to get anyone to engage. So we've built APIs around all of the product features within our app, and we're not fussy. It doesn't have to be our app. So we can give a partner our APIs, they can embed it in their own app and use LeakBot as a kind of Trojan horse, as a way to get customers to engage and download their own app where they can pursue their own ends. And within that, there's obviously lots of opportunity to say, hey, here's other ways that you can protect your home. Here's a new fire extinguisher product that's better to put out a fire if you have a fire on your hob. Here's a really great smart security system that you can buy through the app. So there's obviously lots of opportunities, and we see ourselves with that foothold product. It's a kind of platform to some of those other areas.
Indeed, excellent. Sounds very good, Craig. We are got a couple of questions left. We are sort of up on time now, but I'll try and get them in. How many regions are now live? I see that Stockholm has been advertising LeakBot for free with a 5% discount for a few months now.
Well, I'm going to resist answering that question because I don't want to. We there may be an update coming at some point, so I don't want to kind of steal the news because I get overexcited in a webinar. But yeah, that's very canny of someone to notice, because that is, you can see online the activity that we're doing in Stockholm. So yeah, I can't deny that. If you look hard enough, you will find some activity online in Swedish. So credit to whoever's done their research to see that.
Okay, thank you. Well, yeah, I think so. That's all the questions we had, I think. Oh, there might be one more there. How is the institutional interest progressing?
Do you think they mean institutional investors by that question?
I would assume institutional investors, yes.
Yeah, I mean, it's an interesting kind of journey that we're on, really. I mean, you know where our market cap was even kind of 6 months ago, 9 months ago. And I think the kind of uptick, the nice thing about it is it's brought a lot more people into understanding what the company's about and what we're trying to do, and seeing the potential. And I'm learning on the job as well as we go through these different gears. But I mean, my understanding is 30 million, 50 million market cap. A lot of institutions are going to be interested in us when we get to that stage. The fact that we've got a green economy mark, because the sustainability angle is also of particular interest to lots of institutional investors. So I think we're well on our way, on the path in the right direction and now, and that's already leading to some interesting conversations.
Okay, fantastic. Well, thanks very much, Craig. So what I'd like to do now is just bring other people back in, our other guests, Angus Forrest and Kerry Chambers. So we'll have our round table discussion. So I'll pose a point and we can discuss it and see what everyone thinks. So the first one I want to come to is some of the biggest challenges and also opportunities in building and scaling a subscription service model in technology. And I want to think about sort of experiences in adopting a subscription-based business model and focusing on the potential advantages and potential pitfalls. So, I mean, Angus, let's start with you, because you said you'd had history in building tech companies. What are some of the biggest challenges, but also the biggest opportunities, do you think?
Well, I've always focused on businesses where I've got some expertise, and that is business to business companies, or operating in business markets, where the company is selling a product that enables its customers to have a significant and measurable benefit. So once you've started there, then the great thing about SaaS as a model is you make a sale, you don't walk away from the customer for 3 years, but your sales force can then look at a steady revenue stream from that customer for 3 years, whilst you go out and find some more customers. And at Acuity, we have been able to enhance the renewal rates. So the renewal rate's up from 82% to 96%. And once you've done that, then every additional customer you add is money on the top line. And again, they're all for 3 years, and the renewal should be for 3 years. And the value for the business relates to the scale, so you're building scale, and the growth rate. So then you can focus on driving growth. So that's why I like a SaaS business. Now, there are SaaS businesses which are consumer facing, but I don't really understand about consumer spending, and I don't understand how to make them spend more money. I'm a miserable person. I don't spend money, and there are many people who are much cleverer than me at getting consumers to spend money. I stick to my knitting, really. Does that help?
Yeah, so you're saying, you go for the institutions and the companies rather than the consumer, effectively, when you're doing and trying to scale up these SaaS business models.
It is the one I understand, and the one where I've had success in the past.
Okay, Kerry, what about you? What challenges have you come across in scaling tech companies, and also the opportunities that are perhaps available?
Yeah, so some of the challenges, customer acquisition. So we're lucky, at Acuity, we've got quite a large customer base, but acquiring that large and consistent customer base can be quite a significant challenge.
Mm-hmm.
In order to do that, you've got to have very effective marketing strategies, good sort of client management, good customer segmentation, really sort of account-based marketing and targeted campaigns to bring new subscribers. Other challenges, we talked earlier about the pricing optimization. So as the business scales, as the SaaS business scales, you've got to make sure you've got that optimal pricing structure in place. But on the flip side of that, the opportunities are that there's that recurring revenue. A subscription business model has huge advantages. It's predictable when you've got those recurring revenue streams. When you have got that customer acquisition right, then you've got a great base for that upselling and cross-selling within your customer accounts, so that can boost revenue as well. So there are challenges, but on the flip side of all of those challenges, I see great opportunities as well.
Okay. Well, Craig, you mentioned as well, didn't you, about the opportunities for upsell just in the last question there about you integrating with APIs on insurance companies' apps. So, I mean, again, what sort of challenges do you see or opportunities do you see here in growing ONDO?
Yeah, well, I think this question about recurring revenue business models has been really relevant question for us as well. I mean, we see the same advantages as Angus outlined in terms of the predictability of the revenues is obviously very appealing. It's also appealing to investors because I think they value the recurring revenues in terms of valuation multiple a lot higher than kind of one-off kind of widget revenue, so to speak. One of the challenges that we've seen is there's lots of things about what we do that we aspire to be a bit like a SaaS business, but of course we're not exactly, because we have an actual piece of hardware that needs manufacturing at the beginning, which obviously requires some cash to make the thing and pay for the thing in the first place. And then we've also got some kind of repairs to pay for, and we have more of them in the first year. So our costs are kind of more front loaded. So from a cash point of view, that incentivizes you more to kind of price more up front and sacrifice the longer run revenues. But it feels bad when you do it, because you feel like you're kind of sacrificing that recurring revenue that's ultimately going to drive a bigger valuation on the business. So it's always felt like a conflict. I mean, in what we've kind of landed upon more recently is a kind of cake and eat it strategy, where we've been pricing the contracts on a flat fee. And we say, look, this is, in the US, we say, for example, it's $5 a month into the future, and that pays for everything. But then what we've been saying to our kind of cash rich, very big insurance customers is almost half apologetically, once we've agreed the terms, and said, oh, by the way, our payment terms are, you need to pay the whole first year fees up front immediately on contract signature. And so far they've been happy to do that. So I wanted to ask Angus a question, actually. Did you say that on your SaaS contracts, did I hear you right? Do you say that they pay you for 3 years of fees in one go at the beginning? Is that right?
Regressively not. They sign up for 3 years and then they pay annually in advance.
Still they pay annually in advance though. Oh, that's good.
And basically a decent customer of ours is going to spend, say, 60 to 80,000 pounds a year for 3 years, plus installation, which probably consulting is another 30,000, so 300,000 pound deal, roughly speaking.
Yeah.
Of which we get the consulting, obviously, the first year, because that's when all the grunt goes in there. Okay, but it is a good revenue model. Investors like it. It means you've got less outgoings. It should be cash generative.
Indeed. So having a payment up front, that is something that is that almost industry standard, would you say, or not?
For SaaS businesses, it's very, very common.
It's very, very common.
Why would you do it not if you can get away with it?
Exactly.
But if you take out an insurance policy, you pay probably, if you're a business, you pay annually in advance, don't you?
Usually. Okay, well, it certainly gives clarity as well, doesn't it, to investors as well, with what's to come and gets that cash in the door. Well, thank you for that. That was nice. Now, Kerry, you mentioned earlier about talking about AI, sort of, and machine learning, and I want to sort of ask, as tech companies, and of course ONDO as well, with your algorithm there. I don't know if there's any kind of AI or machine learning that goes on there, but how could you perhaps leverage these new technologies, the machine learning, the AI, the Internet of Things, or other technologies to enhance your product offerings and, of course, the value proposition? So, Kerry, what do you think, first of all, because you mentioned AI earlier?
Yeah, so in terms of risk assessment, so AI, absolutely, we will be able to take advantage of the AI applications that are out there for risk assessment, risk management. So AI would be able to assist in automating those risk assessment processes. AI can analyze huge amounts of data, can identify patterns, trends, potential risks within organizations. So mixture of sort of augmented intelligence and machine learning algorithms can assist what our users will be doing in stream to predict and prioritize risks, therefore helping them with more effective risk management.
Okay, so it's an enhancement to your product and then to your end customer.
Yes, absolutely. Yeah.
Indeed. Craig, anything you can incorporate with LeakBot in terms of machine? I mean, presumably it machine learns anyway a little bit, because it's using the algorithm to determine the equilibrium of temperatures and then working out if there's potentially a leak. But any enhancements or any new technologies that you can utilize, maybe with the Internet of Things as well, to enhance the product offering?
We don't kind of use the phrase loads and loads as when we're talking about the company, but essentially we are an Internet of Things business. So Internet of Things is all about using connected technologies to connect and generate data from sensors in places that you didn't used to be able to reach. And if you think what we're ultimately doing is, insurers love data. They're always trying to price risk based on that data. If you think about the peril of water damage, the kind of data feeds insurers tend to use are really how big's the house, how many bathrooms has it got, and have they had a previous claim? And beyond that, there's not loads of data points that they can use to understand how risky a property is. If you think what we do, we're effectively, putting hundreds of thousands of sensors all over the world in people's houses, and that sensor can tell, has that property got a leak right now? Has it had a leak in the past? Did the customer take some action about the leak? If it's got a leak, how big's the leak? How long's the leak been there? So we generate an awful lot of kind of risk relevant data on the back of that technology. We use machine learning within the algorithm. I think the thing that increasingly that's interesting, I mean, to every business, I don't think we're any different to anybody else, but especially as a startup where we're scaling, is how do we, when we scale the top line and we scale the volume of the sensors that are out in the market, how do we make sure we don't scale the direct variable cost of things like customer support? So the recent advances in AI in terms of, been readily accessible within different CRM systems. So you can automate chatbot responses, automate email responses to standard things. The leaps and bounds in that technology at the moment are really incredibly useful to a company like us because we can scale the business without having to add a lot of bums on seats in order to do it.
Okay. Angus, you mentioned earlier your age. It wasn't me, but you would have seen a few technological changes, I presume, in your years. So what are your thoughts on this topic?
I've seen a lot of technological change, and I think all of it to the good and the benefit of consumers and companies. So if you are thinking about AI, it's certainly got a lot of use. It's better use of data, and there's tons of data out there, and it has been since the 1980s. In the 1980s, there were every retailer in the UK got enormous amounts of data, but they didn't know what to do with it because they couldn't analyze it properly. Now, with modern technology, A, computers work a hell of a lot faster. B, we've spent a lot of time analyzing data. And C, there are new things coming along, such as artificial intelligence, augmented intelligence, and it's just going to make the people who adopt it that much quicker, that much faster, and give them a competitive edge. And if they do it well, then they'll be great successes. If they do it badly, they will fall by the wayside.
Indeed. Well, if tech companies like yourselves can't take advantage of emerging tech, then I don't know who else can, but it certainly sounds like both companies want to do their best to incorporate some of these new advances in technology. The final point I want to discuss with you all is about valuing tech companies like yourselves. And obviously ONDO, fairly new to the market. Acuity recently, Drums recently become Acuity. Again, fairly new to the market. Of course, you can't talk about forward-looking statements, which would give everyone a very clear idea of the revenue path and perhaps the value of the company. But how can tech companies or SaaS businesses communicate their value to the market to really help investors understand the value and future proposition? And I don't want you to just say, wait for our forecast, which we all are waiting for with bated breath. But what else can you do to communicate the value? Because it's a little bit different to other companies where you can value something tangible, for example. So what would you say to that? Angus, I'm going to ask you first. It's your responsibility really is to, give shareholders a return on their investment. So how do you plan to communicate the value?
What we do is we endeavour to provide data about historical performance and improvements over historical performance. So since Kerry joined, or since we invested, the revenues have been growing up at about 25% per annum. The various other metrics which we use, which we publish them, are improving year on year. So it is for the investors to look and think whether we're doing well compared with other people. But if you compared us with a traditional company, our growth rate is good, and with the opportunities given by the partners, you don't have to have a crystal ball to think, actually, this partnership agreement could transform this business and its valuation. So if we looked at SaaS metrics, if you got revenues of about 2 million, you probably valued somewhere between 3 and 5 times revenues. If you're growing a bit faster, you're certainly at 5. If you can get to 5 million of revenues, you probably 6 to 10 times. As you grow bigger, so you become enormous. I mean, you don't have. I can give you other examples. So Salesforce, which is obviously an unbelievably successful company, but one of the reasons it was unbelievably successful was because it had a SaaS revenue platform, and people valued it because you could see the forward revenues, you could see the growth, and they could focus on just making the thing bigger and bigger and more powerful. And if you looked at a massive number of businesses in the world, they use Salesforce because it's a great product, and they could then afford to incorporate other things that other people don't. And we, as we grow, recognize that our product has got to change and grow and incorporate the sorts of things which we've been talking about to add value as far as our customers are concerned. And that will drive growth in number of customers and value generated, which in turn will give the shareholders a decent return, I hope.
Well, you mentioned metrics, and you publish them regularly. Could you give example of some metrics?
Yeah, I could tell you about the in our annual report, which I happen to have in front of me. We say that the revenues of Acuity have gone from 1.2 million in 2021 to 1.8 million in 2023. Gross margin is at 92%. The renewal rate has gone up from 81% to 96%. The sales pipeline has grown from 1.5 million to 4.2, but it's now about a bit more than that. Net recurring revenue, which is it's a measure which people use for SaaS companies, is 125.6%. That's net recurring revenue, and that's at the top end of what people expect.
Okay.
You're doing well if you get over 100%, and we're at 125%.
Okay, so over 100% net recurring revenue.
Yeah.
Craig, would you be looking to use sort of similar metrics perhaps in the future to help articulate some of the value in the company?
Yeah, I mean, it's very interesting listening to Angus there, because I think in SaaS, for pure SaaS businesses, there are certain particular metrics that investors are used to looking at. So there's some established benchmarks for how you drive valuations. I think a couple of the challenges that we have is, one is we're a bit weird because we don't fit into any exact typical box, so people aren't quite sure how to value us. And also we're still new on the market, so We're kind of relatively new as a company, as a listed company. So there's not many numbers out there. We're due to publish some more quite soon. So I think investors are still trying to kind of figure out, what is the model and how does the pricing work, and when we do an announcement, what's that really going to add? So yeah, I think I will definitely see the need in our situation for some kind of broker note in the not too distant future. I think will really just help people understand the kind of core model and understand the potential of the business. On the flip side, I think what's worked well for us is when I say fundamentals, I don't mean fundamentals on what's the EBIT number and what's the valuation multiple off the EBIT. I mean fundamentals in terms of, is there a really big market for this product? Is there a big problem to solve? Yes. Is there a unique solution to that particular problem that's defensible and hard to copy? There is. Is there some traction that this thing actually works with blue chip partners? And is there evidence that this thing's growing quickly? Yes, there is. So I think on those fundamentals are the reasons why the investors that have discovered the story relatively recently have got really excited about it. But then the problem with that is that what value do you put on that? And a question becomes about speed, is how fast can we go to take advantage of the opportunity that's in front of us? It's almost so big, it's really difficult to put any kind of, if you do the math on, well, how big could the company be possibly if we really get going? It's kind of such a big number. It's kind of quite incredulous. So yeah, we're still trying to figure that out. But I think a broker note fairly soon will be very helpful.
I think, Craig, you've absolutely hit it on the head, that communicating data to shareholders and doing it properly and openly, and obviously everything's not going to work, so you've just got to explain some things haven't worked, but being open with shareholders and explaining and why you're doing stuff, that's what people want to hear, I think, and they want to back success, and they want to understand it's not coming out of a magician's hat, because otherwise how do you know what you're going to get? You don't. And if you build up a story, you can take it forward.
Yeah.
Excellent. Well, Kerry,
that's why we're on StockBox, actually.
Indeed. Well, it's all about the story, isn't it? Absolutely. You've got to articulate the story to investors. Kerry, I'll give you the last sort of word on this topic.
Okay, so I mean, Angus has covered a lot of the metrics that we look at. That was quite an interesting discussion there. I think perhaps one thing that we could add into that is certainly an interesting metric for us is the customer lifetime value. So, estimating the total revenue that we can expect to generate from a customer over its lifetime. So the acquisition costs, the subscription pricing, churn rate, things like that would give us the CLTV, which obviously then gives an additional metric to the ones that Angus has already mentioned and that we've talked about in that discussion. Okay,
thank you. Well, it sounds certainly like Acuity. Yeah, you've got lots of metrics you can share. And Craig, let's get that broker note out so that people can perhaps start understanding the business model and the valuation the broker puts on. But of course, when it's appropriate, when it's time, I'm sure you'll both be releasing your forward-looking statements and forecasts, and that's what will really get investors the tangible information that they want. But thank you all very much for your time this evening, Angus and Kerry from Acuity. Thank you very much for joining us.
Thank you.
And Craig from ONDO InsurTech. And thank you for everyone at home watching. Stay tuned on StockBox because I'm sure both companies will be on the platform in the near future. But thank you all very much for your time this evening.
Thank you.
Thank you.
Thanks a lot, guys.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.